A rising gold price is an indication of a failing currency. And once you really understand that that currency is failing, and that's what that inflation is about, you make different choices. You get your wealth out of the system that is losing value constantly, compounding it regardless of how they make the paper contract. Because what we know is central banks are accumulating more gold than they ever have in recorded history. Why are they doing that? That line shows you zero. Look at 2000. What was happening in 2000, moving into 2000 from 99? Y2K, do you remember that? But they stopped selling off and leasing it out as heavily, and it was going up from there. And by 2010, they were net buyers. So we crossed that zero Rubicon. And now smart money is voraciously accumulating because they know what they are doing to this stuff. But what we're looking at here is spot silver. And I know a lot of people that have been accumulating silver, and the same thing with gold. Oh, silver is not doing anything. Okay, well, it is in the premiums here. But what you have here is a wedge formation. And you just see, what you see here are a series of lower and lower highs and higher lows. And this is forming like the wedge of a cheese. At some point, it is either going to break out above the wedge or break down below the wedge. If it breaks out above the wedge, then the most likely next outcome is something like this, where you get a significantly higher pop. If it breaks down below the wedge, then you are most likely to see the spot price decline. They can make that happen just by creating more paper silver. So don't be discouraged by that. Use this as an opportunity. When should you accumulate? Where are we in there? Because right now, where we are is in the bear trap awareness phase, nearing a wedge, break out above or break down below. Don't be fooled, because the next thing that is going to happen is once we break out above, you're going to see the spot price go a lot higher. But in the meantime, this is also like a mini cup, isn't it? It's like a mini cup. And so the smart money is accumulating the physical silver as fast as much as they can. This is a spot gold chart. So this is the contract. We know the physical markets have been growing, but this is the spot. This is the one that most people look at and say, gold isn't doing anything, blah, blah, blah. And this does guide the price of bullion and just basic. But where are we? Because this is one of the pieces that we needed a breakout, and we got it. And that was back in 2009, 2010. And spot gold is still in the awareness phase.
Lynette Zang's insights into the current economic landscape emphasize the importance of understanding the signals that a rising gold price sends about the health of a currency. When the price of gold increases, it is often an indication that the currency is losing value. This is a critical concept for investors to grasp, as it highlights the need to diversify away from assets tied to failing currencies and into assets that retain value, like gold and silver. Historically, central banks have accumulated gold during times of economic uncertainty and inflation. The recent trend shows that central banks are buying more gold than ever recorded in history. This shift began around the year 2000, a period marked by the Y2K scare, where there was significant concern about whether computer systems would transition smoothly into the new millennium. To prevent a rush on physical gold, central banks sold off and leased out their gold reserves heavily. However, by 2010, central banks had shifted from being net sellers to net buyers of gold, recognizing the long-term value of holding this precious metal. In the context of silver, Zang points out the formation of a wedge pattern in spot silver prices. This technical analysis suggests that silver is poised for a significant move, either breaking out above the wedge and increasing in price, or breaking down below the wedge and declining. The smart money, as Zang refers to it, is accumulating physical silver, anticipating that the breakout will likely be to the upside, resulting in higher prices. Zang also discusses the concept of a bear trap awareness phase, a stage in the market where prices are consolidating before a significant breakout. This phase is crucial for investors to recognize, as it provides an opportunity to accumulate assets at favorable prices before the market moves higher. In the case of silver, this phase is nearing completion, and investors who recognize this pattern can position themselves to benefit from the anticipated price increase. In the context of gold, Zang highlights the importance of understanding long-term trends and technical patterns. The triple top formation in gold prices, for instance, is a rare and significant pattern that indicates strong resistance levels. Despite efforts to suppress the price through paper contracts, the physical demand for gold continues to grow. This divergence between the paper and physical markets presents a unique opportunity for investors to accumulate gold at relatively undervalued prices. Moreover, Zang emphasizes the strategic behavior of central banks, which have shifted from net sellers to net buyers of gold since 2010. This shift reflects a growing recognition of gold's intrinsic value and its role as a hedge against economic instability and currency devaluation. Central banks' actions serve as a powerful indicator for individual investors, highlighting the importance of holding tangible assets in a diversified portfolio. The suppression of gold and silver prices through paper contracts is a temporary phenomenon, according to Zang. Eventually, the physical market will assert itself, and prices will adjust to reflect true demand and supply dynamics. Investors who understand this and accumulate physical metals now will be well-positioned to benefit from these adjustments. Zang also discusses the broader implications of these market dynamics. A rising gold price is not just a sign of a failing currency. It also indicates a loss of confidence in the current financial system. As inflation erodes the value of fiat currencies, tangible assets like gold and silver become more attractive. This shift in investor behavior is evident in the increasing premiums on physical metals and the strategic moves by central banks. For individual investors, the key takeaway is to recognize the importance of holding assets that preserve value. Gold and silver have stood the test of time as reliable stores of wealth. By diversifying portfolios to include these metals, investors can protect their wealth from the risks associated with fiat currencies and economic instability. In conclusion, Zang's insights provide a comprehensive understanding of the current market dynamics and the strategic importance of gold and silver. By recognizing the signs of a failing currency and understanding the technical patterns in the market, investors can make informed decisions to protect and grow their wealth. The actions of central banks and the increasing demand for physical metals highlight the importance of holding tangible assets in today's economic environment.
But look at this triple top, okay? So here's that, there's that, and you can see that it moved up, formed that cup formation, broke out of that cup, and so it's taking a tremendous amount of paper contracts to suppress the price that you see of gold. That is not happening in the physical realm as much, although in the lower quality and the bullion and all that, sure, that's going to be impacted by this. That's your opportunity. Because quite honestly, personally, having lived my life in this area in one way or another, I would always rather hold the lion's share of my wealth in an undervalued asset that is in a long-term positive trend, and the least amount of my wealth in an overvalued asset or instrument that is in a long-term negative trend. But look at how they have suppressed it. Triple tops are rare, right? But a rising gold price is an indication of a failing currency. And once you really understand that that currency is failing, and that's what that inflation is about, you make different choices. You get your wealth out of the system that is losing value constantly, compounding it regardless of how they make the paper contract. Because what we know is central banks are accumulating more gold than they ever have in recorded history. Why are they doing that? That line shows you zero. Look at 2000. What was happening in 2000, moving into 2000 from 99? Y2K, do you remember that? They didn't know if the computer systems were going to be able to handle that transition, and they did not want you buying gold, physical gold, and holding it in your possession. So what did they do? They sold it, they leased it, they did everything that they could do to suppress the price. But look at 2005, if you would, okay? That's when they were really doing that significantly. And what was happening back then? We were in transition, but they stopped selling off and leasing it out as heavily, and it was going up from there. And by 2010, they were net buyers. So we crossed that zero Rubicon. And now, smart money is voraciously accumulating because they know what they are doing to this stuff. So the other thing I want you to ask yourself is, what does this pattern tell you? I know what it tells me. I know what all those patterns tell me. And I would rather be, I don't care how early. Because if you're 1 second too late, you have no more choice. You lose your freedom and your liberty. And that debt bubble has popped and lost all anchors. The foundation of our system has lost all anchors. How does that make you feel? What are you going to do about it? Food, water, energy, security, barterability, wealth preservation, community, and shelter. If you can get into position with that, then let them try to do it. You can say no. You can make a stand, but you can't do it alone, and neither can I. I've been so fortunate because I knew in 2008 that the system died. So I jumped on building all of those pieces that we need, the food, water, energy, etc. But I have a community around me that's helping me execute this strategy. Gold and silver will buy you freedom and liberty and choices, but community is where we can really find our safety.
Lynette Zang's thorough analysis underscores the critical importance of understanding market signals and positioning oneself strategically in the face of economic uncertainty. As we delve deeper into her discussion, it becomes evident that the accumulation of gold and silver is not just a defensive move, but a proactive strategy to safeguard wealth and ensure financial freedom. Zang's examination of the current economic environment highlights the disconnect between the paper and physical markets for precious metals. Despite efforts to suppress prices through paper contracts, the physical demand for gold and silver continues to rise. This divergence creates an opportunity for investors to accumulate these metals at relatively undervalued prices. Recognizing and acting on this opportunity is crucial for protecting wealth in an uncertain economic climate. The concept of a rising gold price as an indication of a failing currency is central to Zang's analysis. As inflation erodes the value of fiat currencies, tangible assets like gold and silver become increasingly valuable. This trend is evident in the actions of central banks, which have been accumulating gold at record levels. Their behavior serves as a powerful signal for individual investors, underscoring the importance of holding tangible assets in a diversified portfolio. Zang also addresses the broader implications of these market dynamics. The increasing premiums on physical metals and the strategic moves by central banks highlight the growing recognition of gold and silver as essential components of a stable financial strategy. For individual investors, the key takeaway is to diversify portfolios and hold assets that preserve value. Furthermore, Zang emphasizes the importance of community and preparedness. In times of economic uncertainty, having a support system and access to essential resources like food, water, energy, and shelter is crucial. Building a community around these principles ensures not only personal security, but also collective resilience. The strategic moves by central banks to increase their gold reserves and reduce reliance on fiat currencies indicate a significant shift in the global financial landscape. This shift presents both challenges and opportunities for individual investors. By understanding these dynamics and positioning themselves accordingly, investors can protect their wealth and navigate the complexities of the evolving global economy. In conclusion, Lynette Zang's insights offer a comprehensive understanding of the current market dynamics and the strategic importance of gold and silver. By recognizing the signs of a failing currency, understanding technical patterns in the market, and taking proactive steps to protect wealth, investors can ensure financial stability and resilience. The actions of central banks and the increasing demand for physical metals highlight the importance of holding tangible assets in today's economic environment. Zang's emphasis on community and preparedness further underscores the need for a holistic approach to financial security. In an unpredictable world, being prepared and having a support system in place is essential for navigating economic challenges and maintaining personal freedom and liberty. By building a diversified portfolio that includes gold and silver and fostering a strong community, individuals can protect their wealth and thrive in the face of uncertainty. In light of these insights, it's clear that understanding market trends and preparing accordingly is crucial for safeguarding your financial future. If you want to stay ahead and protect your wealth, consider incorporating tangible assets like gold and silver into your investment strategy. Stay informed, stay proactive, and remember, in the world of finance, being prepared is half the battle. If you want to stay most up to date on the silver and gold markets, make sure to subscribe to my daily 5-minute silver and gold newsletter. It provides the latest expert insights, breaking news, market trends, and investment strategies, all in a concise format. Click the first link in the description to join thousands of others and enhance your investment knowledge right now. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. Your support helps me stay motivated to bring more valuable content to you. See you in the next video.